Recent advances in artificial intelligence, AI, are fueling optimism for increased productivity in businesses and driving a significant boost in the stock market. The S&P 500's 9% rally this year is largely attributed to a handful of AI-related stocks, including Microsoft, Google parent Alphabet, Nvidia, Apple, and Meta platforms. About 25% to 50% of the gains in these stocks are due to the buzz around artificial intelligence. Société Générale analysis focused on 20 AI-related stocks owned by exchange-traded funds, which have seen a 40% growth in assets under management this year. Removing these AI stocks from the S&P 500 would result in a performance reduction of roughly 10 percentage points, pushing stocks into negative territory for the year. AI-driven stocks are generating the strongest returns, making AI an attractive secular theme for investors. Goldman Sachs strategists estimate that generative AI could lead to productivity gains that expand S&P 500 companies' profit margins by about 4 percentage points over a decade. Despite headwinds such as uncertainty over the U.S. Congress's debt ceiling agreement and concerns of an economic downturn, optimism over AI continues to support the stock market. Stocks of companies involved in AI, like Microsoft and Nvidia, have experienced significant gains this year. However, caution is advised as potentially transformative technologies are susceptible to price bubbles, as seen in previous instances like the dot-com crash. Many investors believe that AI is not a passing fad and recognize its potential as a game changer for earnings growth in companies like Microsoft, Nvidia, and Alphabet.